Hey everyone, George Suri's mortgage broker here. March 2023, I thought I'd give you a quick update and some running commentary. So have we reached the bottom of the market? I'd say don't get too excited about that. Now granted, Sydney is normally ahead of the rest of the country, especially Queensland here when it comes to property prices. Often they go up first there or they decline there first. Now Sydney's just had a little bit of an uptick. However, like I said, I wouldn't get too excited about that. The way I always like to explain it is that property is based on the past, while the share market's based on the future. So what do I mean by that? When it comes to shares, they're very liquid. People are trading them every day, and they're looking at what's the future potential earning of this company, and they're basing it not only on the present, but also future values. When it comes to property, it's often based on the past. If you do a valuation on a property, you're looking at what's the previous sales over the last 3 months, and further to that, you're also, if you want to sell a property, they're not very liquid. It takes you 2-3 months to sell it. So what's happening in the market today is what the intentions were a few months ago. So I wouldn't get too excited about these figures coming in. It's only like a small little bit of a period that there's been an uptick, and we've still got rate rises to come through. And rate rises, because property is based on the past, it takes a little bit of time for these to wash through the market. So let's see what happens there. So next part, first home buyers now need less time to save a deposit. So fair enough. The price of properties have gone down in most areas, and further to that, wages supposedly have increased. So when you put them both together, it's a little bit easier to save a deposit. However, what they're missing in this article is that there's also the other factor of servicing. Now, servicing's definitely gotten harder for clients over the last couple of years with all these rate rises. So what people could borrow before, they can't borrow now. So this deposit, this ability to save a deposit a little bit quicker, probably isn't going to help people that much. Okay, so RBA close to the point where it'll stop hiking rates. So most of the economists, the major banks, are all in agreement here. They think that there's going to be maybe 1 or 2 interest rate rises, and then there'll be a holding pattern for the rest of the year, and then next year there's going to be some downward pressure on interest rates. Now, what's my thoughts on that? Well, I don't put too much stock on the experts, and the reason for that is because they've been consistently wrong. No one thought that the interest rates would get as high as they have, and no one thought that they would, stay where they are right now. Last year, I remember that all the economists were predicting by March that they'd start to drop, so they've been wrong there. I'm not putting all the blame on the RBA either, and that's because there's a lot of worldwide things at the moment that are causing this inflation. It all started primarily from the pandemic. Basically, they printed a lot of money. All the governments around the world did the same thing, printed a lot of money and put it into the money supply. What does that do? It pushes up the value of things, the price of things rather, not the value. It pushes up the price of things. It brings down the value of things, the true value, because your currency is worth less when there's more of a supply. So basically, you go out to buy a loaf of bread, all of a sudden it costs more because your currency is not worth as much and there's a lot more money in supply. So what do they try and do to get rid of inflation? They try and restrict the money supply. All this extra money they printed, they're trying to bring it back and put it under control. And that's a very hard thing to do. In America at the moment, there's banks that are failing, and still the Fed over there put up interest rates, and that's because they're all trying to tame inflation, which is a direct cause of the pandemic spending period. So that's something that we're going to be wearing, and that's a hard thing to beat. And then there's also, of course, unforeseen circumstances that happen. Ukraine and Russia, that happened. Who knows what's going to happen this year? So we trying to predict the interest rates, I don't try and do it. With my clients, if they ask me what an interest rate is going to do, I say, look, I don't know. And nobody does know. The RBA doesn't even know. So you're better off not focusing on things you can't control in this life. So you don't focus on what the world economy is doing, you focus on what you can control. Can you afford, if the interest rates go up an extra few percent, would you feel safer if you had a fixed rate and you knew what you were paying? Or are you comfortable with the rates going up and down? It really comes down to your own personal circumstances there. Okay, so homeowners' reluctance to list their properties for sale. This is definitely true, and it's true for many reasons. Think about if you're an investor right now, chances are you didn't just jump in the market in the last 6 months, 1 year. Actually, most investors have been in the market for a lot longer than that. More recently, it's been owner-occupiers that have been buying during the pandemic period. So, number one, they've already got a bit of capital gain on their property. They don't necessarily want to sell. Why? Because they get capital gains tax. Number two, the rental market has never been better for investors. The rental prices at the moment are the highest they've ever been. So they've got good rental return, they've got equity in their properties, and they don't want to get capital gains tax. So most of them, if they can manage to hold on with these higher interest rates, they will. Now, many of them will have interest-only loans, so that's going to help them with the repayments. And also those interest rates are going to be tax deductible. So a lot of them will hold on if they can. When it comes to owner-occupiers, they don't necessarily want to sell either. And the reason is because, number one, they'll be entering back into the rental market, and we've got the tightest rental market we've ever had. So, trying to get into the rental market and find a place right now is a real headache for most people. So owner-occupiers don't necessarily want to sell either. I think what's going to happen is there's going to be a lot of people with these increased repayments that are going to go on interest only if they can, or repayment pauses. So if the banks allow you to go on repayment pauses where you don't have to pay but your interest keeps capitalizing, I think a lot of people will do that. And I think that's going to stave off a lot of sales. Now, there will still be circumstances where people have to sell, they have no choice. It could be divorces, it could be, deaths, it could be a million different reasons. And for that reason, there will be properties coming on the market, and when that happens, there may be some downward pressure. That being said, I've got to quickly say that I'm not predicting what property prices will do in the future, because I do not know what property prices will do in the future. I see things that are going to hold it up, but I don't know for sure. And it doesn't matter that I don't know for sure. You know why? Because property fluctuating in the short term, it doesn't even matter. It's inconsequential. As I tell my clients, property is a long-term game. You know that when you buy a property, there's stamp duty, there's other buying costs. You know when you sell, there's going to be real estate fees and the rest. It's not something you get in for a quick dollar overnight. It's something that you do for the long term. You build up wealth over the long term. And so what you do, instead of focus on all these things you can't control, such as what interest rates will do tomorrow, what property prices will do tomorrow, what you do instead is you think of all the possibilities, you protect yourselves from them, but you also look at your own personal circumstances and you work out what your goals are and your objectives, and you go forward and achieve those goals. So with keeping all this in mind, that's what you do with property. So no, I cannot predict what property prices will do tomorrow, even though a lot of clients ask me, and a lot of clients ask me what interest rates will do tomorrow. It's the same exact thing. Okay guys, well that's everything. If you've got any finance questions, let me know, and I'll be in touch again for the next monthly update. Thank you.